Welcome back to the channel, and as always, if you are copy trading, you're an absolute moron and you deserve to lose all your money. The information here is just for educational purposes only. And with that out of the way, we're going to look today at today's stock, which is Zillow Group, very popular company, ticker ZG, market cap of 11 billion, but as you will see here, massively down from the highs in 2021 of more than $200. However, a number of things have happened recently with the stock. First of all, we got a pretty bullish last 6 months where the stock reached some lows of low 33 back in November, but has risen up to almost 60 in that period, and currently is dropped back to 43 and is currently sitting at 50 levels. However, if we look at it from a different angle, what we got here, right, you can see a bit of a upward channel trend, which to me signals that in the medium term could reach new highs, could potentially break through that $60 level. Now, that is my price target, and I'll explain later how I'm structuring the trade to better capture that upside. But in terms of what's been happening with the company, first of all, I expect the stock to do better as we progress into the latter part of the year, primarily because the earnings growth for 2024 is slightly below sector average, but the earnings growth for year 2025 and 2026 are actually above sector average. So we had here a bit of a latecomer, if you will. However, this stock has gone through some change, which you can see here just very recently. I'm gonna zoom in a little bit more. The stock was sitting around low 50s and dropped precipitously only to go back up. And why was that? Well, the National Realtor Association reached recently a settlement by which they have committed to pay 400. So essentially, what happened was that there were claims that they were using unlawful practices, and they have admitted this, leading to revised regulations in how the cost of selling a home is structured. So the market reacted very, very negatively to this, as you can see. However, there's an analyst out there that claimed that in reality this move was exaggerated and it could actually help companies like Zillow because it would unbundle agent commissions, forcing prospective buyers to have to pay out of the pocket for their own agents. So some analysts have the view that in reality this move will be positive for Zillow. Now, the way I'm playing this is I like the kind of momentum that we are seeing here, and I think that the stock can quickly reach the low 50s or potentially even 55 level in a pullback move because there is quite a bit of momentum going on. And if we look at the volume as well, it's pretty much mirroring the initial move, but at the same time, my views on the sector are bullish. So first of all, there is a P differential gap between financial year 1 and financial year 2, which if we apply a multiple of 35 would get us probably later down the line into a price target of 72. That's going to be my price target number 2, but initially I'm aiming for 60. What's also happened is that in the last few months, the analyst community, the sell-side analyst community, have increased the price target quite consistently for the stock. So the consensus price target has moved from 52 to 59 over the last 3 months, and that's with a coverage of quite a few number of analysts. So if we go to market beat, So let's forecast. So yeah, we got 8 buys, 5 hold, and 1 sell. But you can see how even if we look at 1 year prior, the move is quite consistent to the upside. And we got some reputable institutions saying that price target should be sitting at 66. That's relatively recent. We got Barclays boosting the price target. So that to me looks pretty good. At the same time, there have been some news in the sector. So first of all, Fitch Ratings predicts that 2024 will be a turning point for home prices. Just like in previous years, they have proved to be quite reliable when it comes to looking at the direction of the sector. They think that the pressures that have been affecting home buyers are alleviating, and the recent developments announced by the Fed that confirm their expectations for interest rate cuts later this year could bolster the sector. At the same time, the Biden administration has announced some measures that will have a positive impact for home buyers. So let me look here. So let me put this here. So there's an article here. The Biden proposed actions to reduce housing costs have resulted in real estate stocks gaining. They recently made a number of proposals that aim to lower the current high cost of ownership, including a $10,000 tax credit for prospective home buyers. And the interesting thing is that this is the equivalent of reducing the mortgage rate by more than 1.5 percentage points. So that helps 3.5 million families purchase a home over the next 2 years. The other thing we have to bear in mind is that we come from a bearish real estate sector market, and so we are now, in my opinion, starting to get out of that. So we have a number of driving forces, and at the same time, the economy, especially in the United States, is proving to be more resilient than in other places. So for me, I see this a sector that's going to be recovering ahead of other countries. You may recall the previous video talking about KE holdings in China. So this is a long trade that I'm going to put in the portfolio against that. And in terms of KPIs, you can see that we're starting to come out of that. So obviously you see a bit of softening in terms of the category search for the company, for Zillow, but probably less so than with other competitors. At the same time, these figures are more up to date. You can see a softening in terms of the daily active users in 2023. But at the same time, the transaction value has decreased quite a bit. And as you know, this is a cyclical sector, which I think is going to start turning. So obviously that has a positive impact on the company once that happens. The historical homes turnover is also at multi-year lows, and so I think the way from here is a recovery as we enter into a new bull market, which we are. So very good KPIs here in the company. Revenue share gains, integration of premier agent partners. This is all good stuff. This is all good stuff that is having a positive impact on the revenue and the earnings of the company. Rentals as well, that's part of it, and we can see the listings, for example, going up over the last few quarters. We can see the acceleration of multifamily property and revenue growth, and the revenue for rentals as well. And the company has clearly defined growth pillars that they're executing for the time ahead. Um, Overall, I think what's the most important is that the company has been able to maintain revenues despite the drop in total transaction values, which is definitely a good show of a company that is being well run. And just moving this screen. And I think overall, if we go back to the chart, we have a pretty good opportunity here to enter at a good valuation. I like the momentum that's going. So I think that I'm gonna enter this trade now. So I'm gonna buy some calls on May. So I'm gonna buy 17th of May calls and sell 19th April puts on a ratio. That provides me with exposure to the next earnings, which is May 3rd, but it gives me um, the full credit, assuming that the stock stays below 55 by the 19th of April. If it goes above that level, well, I'm doing this on a ratio, so I stand a chance to make a profit. So I hope you enjoyed the video. Subscribe and see you soon.